All right, traders, let's take a look at the market. So we had a bearish close below the 50-day moving average. Prices have not closed below the 50-day moving average until November of 2016. So what do we have? So I discussed this as very distributive. This looks like it's very bullish. I compared it to the beach ball effect, but we're not getting any follow through. And if we're not getting any follow through, ultimately we have to respect price action. So I'm a little indecisive here. I think everyone's indecisive, and nobody wants to initiate a trade. Who wants to buy a trade in the middle of a trading range? Your risk now is this downside risk. Who wants to short a trade in the middle of a trading range? Their risk is upside, here. So I think we're seeing some hesitation, but we are correcting laterally through this sideways action within the range of the bracketing here. But what do we have? So, we had this nice bullish spring, rallied prices through. We had a rejection of the upper trend line. And then, we have these higher lows. But again, I kind of commented that these higher lows might be some confirmation of bullish absorption. But I guess maybe what I failed to articulate is the character at which they're doing it. So when we have these narrowing price spreads or these dojis, that means that although we're going higher, it's going higher with difficulty. Demand is having a difficult time overcoming supply. And then prices break down, bulls bring it back up, dip buyers. So that looks bullish, but then now we're just kind of falling off there. So you have to respect that prices are dropping. We have to look at some other tools, see what's going on. But ultimately, we may be in the process of confirming this prior resistance as support. So if you're interested in going long, it is a reasonable expectation to take a long entry along support. You have to stop loss if it goes down below these levels, with the intent of trading into resistance. So, from a trading perspective, I really don't like the risk reward currently. I would look for an opportunity for prices to break down, buy the weakness, buy the fear, and then trade that reversion trade back up into the range. Let's take a look. So I shared this chart earlier. This is the total asset RIDEX money market. I don't look at this very frequently, but it is helpful because you can see that there's been a pretty defined range that they've exchanged their capital or exposed their capital to risk. And I can appreciate that they've actually offloaded some risk here. And prices actually really haven't responded that aggressively here. So this is bearish. This may also be bullish. If they've taken money away, there may be an opportunity now that they say, hey, there's less risk. Let me expose my capital, bring it back up, and they'll sell it here. So again, I think the trade remains within this range. Are we testing prior resistance and confirming that as support? We'll see.